Right, so that's the recording started, so I'll hand over to Ian now.
Thank you very much. I am sorry, just give me 1 second. Hopefully this will, oh no, this is where technology, there we go. Um, so could you just confirm that you can see the slides?
Yep, all good.
Okay, fantastic. So yeah, hello everyone. My name's Ian McLean, and today I'm going to give probably a short sort of half-hour presentation that covers a piece of work that we completed for Local Energy Scotland last year. And generally, the remit was to provide an overview of the onshore wind development process. Just as a bit of background, I'm the wind technical director at Locogen, and I've been in the renewable industry for 20 years this year, with around 15 of those at Locogen. Over that time, I've had the pleasure of seeing a number of community-owned wind projects through from initial concept all the way through to operation. These projects generally involved us at Locogen working as a consultant on behalf of a community group. But we've also worked on several shared ownership projects where we took a more direct stake in the project. So, oh, sorry, that's a jump. The drivers for this bit of work. Um, the aim was to provide a general development overview document for larger onshore wind projects, and this was really aimed so that communities can better understand the process and crucially see where shared ownership fits in, as it is anticipated that this will increasingly become an avenue for community ownership in wind projects. And there are a number of differences between the smaller single wind turbine projects and larger wind farm uh, ventures. Um, and sort of really the grid connection. It's generally a lot more expensive and more complicated, as there's a need to factor in potential reinforcement to transmission networks or connection at transmission level, which is can be magnitudes more in terms of the connection cost and also some of the costs in the run up to the project being connected. Um, there are also alongside the sort of more complex grid works, there's more significant grid liabilities and security payments that need to be paid or accepted as grid connection dates get closer. And this is not something that generally smaller wind projects have had to needed to accommodate. Also, for a large wind farm, planning timelines are probably doubled on average when you are starting to look at a larger wind farm project. And this comes with significantly more cost at risk. And finally, and understandably, larger wind farms are nowadays looking at delivering turbines with blades of 70 to 80 meters, which dwarfs those smaller wind turbines that were generally sort of the scale that community projects were going for. Um, so this work builds on some ongoing projects that we are either completed or are still undertaking on behalf of Local Energy Scotland, including two larger community-led wind farm projects on Lewis and another proposed wind farm in the northeast that's being led by a community project. And as Christine mentioned, a key part of the scope was to integrate shared ownership considerations alongside the wider development works. And we were very grateful for a lot of the support that Mark and Christina provided in that respect. So you're jumping on to into some of the key deliverables. It was quite a challenge, but we were very happy that we believe we've managed to set out six development works across six key development areas and covering 6 defined phases of development. Um, and these are presented in the report within the key deliverables and also sort of on a section by section basis. So hopefully it is, I say, relatively easy to follow in the document. And I appreciate that, for those that maybe haven't previously been involved in any wind development project, there is a lot to consider and there's maybe a lot of new terms. So we were as careful as we could be within the document to set out sort of explainers and yeah, we whilst we couldn't avoid lots of acronyms, we've at least put in an explainer on the front page to make sure that people can keep track of all of those. But yeah, so these are the sort of the key areas that we set out. So in terms of the development phases, we'd set out initial feasibility, which is your sort of initial proof of concept that the project has some legs. Um, Detailed feasibility, which digs into more details on key risks and looks to understand if those can be overcome. The permitting stage is primarily there for the sort of securing of the planning consent, which is the sort of a major hurdle for any development. We then move into the post consent stages, and we have the design and procurement stages where the project we're looking to get to a point where we have a firm cost and a firm understanding of layouts and generation, and that allows the project to move towards and reach financial close or final investment decision. Um, and then from there, it's the relatively simple steps of building the project and then operating it, hopefully for 25 to 35 years. And then in terms of the typical development works, the 6 categories, so property, that's all of the that covers all of the legal agreements that's needed, leasing the land, ensuring you've got rights of access, needing sort of grid connection, way leaves or servitudes. Then oh, excuse me. Then you've got the grid side of things. So that's approaching network operators, securing the grid connection offers, and then working with them through the process to get to the stage where they are ready to deliver and connect the project. Then consenting, which is pretty much covers all the permitting stages. The technical works are ongoing through each of these 6 phases, and that includes things like wind monitoring and the lights, and also working on layouts, optimizing turbine selection, various things across the 6 development phases. And then the financial and shared ownership are again sort of come through all 6 development phases. And we've looked to set these out by these categories and by the phases as well. So hopefully it should be relatively easy to follow. Moving on, so this was one of our key deliverables, and I apologize. I appreciate this is a very busy slide, and you may not be able to read it particularly well. I made it as big as I could. We were very proud to manage to get all of this onto one A3 page in the report. So when it's available, would definitely recommend you go and have a read through. But what we've tried to set out here is each of the 6 phases, and then what works are typically being undertaken in each of the different work streams during that phase. And despite what it looks like, we have not tried to capture everything that is happening on the screen, but look to focus on the typical key works across each work stream and at each phase. We've also included indicative timescales of the typical time taken to move through each phase, and this ties in with the project program, which is a Gantt chart, which I'll move on to next. And as stated, yeah, it's really there as a sort of an aid memoir to what is generally going on at each phase of the project. And it's again no two projects are ever the same, but this is a as much of a generic typical project as we could put together. So moving on, we have here the wind development program. So we've managed to keep the color schemes going throughout. So hopefully that helps. But again, we've got the 6 different work streams down there, and this is sort of sets out the key works within each of those phases, each of those work streams, and then yeah, I suppose key things to take away. Um, the program there has the project being delivered in just under 8 years. I would say that for a typical onshore wind farm, 7 to 9 years from initial idea to the project being commissioned and operational is not unusual. Yes, it can be done quicker, but at the same time, it could also take a good bit longer. And then just to help understanding, I can add some high-tech lines to split out um, each of the different phases of development. And the first thing to note is that things don't always go to plan or sit perfectly in their development phase. For each work stream that we've identified, there are typical delays or rate limiting steps. And so, for example, if property is the legal agreements do take a good amount of time. Most of them are, as you can see here, are generally front loaded, as projects ideally don't want to go into planning without securing clear rights of development on the land in question. However, that doesn't mean that other secondary property agreements, such as rights of offsite access to enable blade delivery, or as we discussed, sort of agreements on grid cable routes, are not left until much later in a project. And we've had plenty of examples over the years of projects that are moving into construction, and some of these property agreements are not yet finalized. With grid, this is increasingly an area where there can be a lot of delays. And for example, in the last couple of years, we have been waiting 12 to 18 months for National Grid to come back with a confirmed connection date. And many developers will understandably not want to undertake a huge amount of work until they know when that connection date will be. So that can leave projects that's sitting on their hands for an extended period of time, if they're uncomfortable about what the connection date coming back may be. On consenting in terms of timeframes, you can see here that we have included for 2 years of survey works, and that's pretty standard. And that 2 years of survey works is pretty much down to the bird survey works that are required for the majority of large wind farm sites. Sometimes we can argue for a reduced period of survey, but often the full 2 years will be needed. And one thing that we haven't included in this program, which can add 18 to 24 months to the whole process, is the potential for needing to have to go for a planning appeal in the event that the project is initially refused. So as you can see, that would add 2 years to, well, potentially 2 years to the whole project, as most developers won't progress with key technical procurement and financial procurement until such time that they've got a working consent. So on technical side of things, you can see which is the purple. Most of the works are sort of loaded into the post-consent and construction phase, with wind monitoring being one of the sort of initial layout works, and wind monitoring being the sort of works that are ongoing alongside the consenting works. So on the financial side of things, we can see here that um, after an initial bit of financial modeling, the real works kicks in post consent as you're working towards uh, you're getting your final investment decision and most likely sign off from a lender, where that involves huge amounts of due diligence and financial modeling and confirming all prices and revenue streams and such like. So and then shared ownership, we have within this, we've sort of, and through discussions, we've identified that certainly recommended that shared ownership, if being discussed, is something that's kicked off at the feasibility stage or the detailed feasibility stage, where there's a good chance that the project is looking like it is going to move through into the permitting stage. Um, and early conversations at that point are definitely beneficial, to understand heads of terms for any agreement, or heads of terms for any sort of way that the sort of shared ownership will be structured. Generally leaving a lot of those discussions to the back end or the post consent stage can be very challenging, because generally that is when there is a huge amount of activity, and often developers will have maybe have reduced resources available, as they're moving as quickly as they can towards financial close. So moving through here, just one more thing while I've got the wind development program up. I wanted to flag trigger date, which is a grid term. And generally, the trigger date is a point around about 3.5 years before a project is to be connected, whereby the liabilities and security, so basically the cancellation penalties applied to a project, go from relatively small amounts pre-trigger date to potentially millions of pounds post-trigger date. Now, the reason to bring that up here is to, and I will come on to it a bit further down when we start talking more about the grid, but just to be clear, most developers are understandably very keen to de-risk a project ahead of that trigger date being reached. Because, as you say, once you go through that and you accept that you are stepping through the trigger date, again, yeah, at the very least, um, because basically beyond that point, the National Grid are saying we are investing large sums of money in potentially reinforcing our network to enable you to be connected. And if you decide beyond the trigger date that you no longer want to progress with the project, we will be out of pocket, and the security payments and cancellation charges reflect the expected amount that the National Grid is out of pocket should you pull out of the project beyond the trigger date. So this was just something, and I appreciate this is might be a new term to many of you, but I'll come into a bit more detail in the following slide, on what these kind of grid liabilities and securities are, and how they look in terms of numbers. So focus area on the grid. So yeah, I think grid is undoubtedly one of the key challenges, if not the key challenge for any new Scottish wind development. There's been a huge number of things that happened over the past few years that have increased the importance of understanding the grid connection, and de-risking it as much as possible. So just in terms of one of the main pressures, grid connection costs have generally increased by 50 to 100%, or sometimes more, over the last 3 years. A lot of that triggered by um, significant inflation on cable costs and switchgear and transformers and other electrical equipment. But that's put huge pressure on projects, especially if you've, say, accepted a grid offer at £2 million, and then in 2021 and in 2024 you're looking at 6 million in grid costs. So this has been a huge problem for most projects. As discussed before, you have these significant cancellation charges which are applicable to larger projects where there's sort of transmission reinforcement implications applied. Sorry, so you can see here that your cancellate these are a project's cancellation charges in the run up to this trigger date. So in the year before trigger date, you might be needing to post a security of £120,000 with the grid operator. But once you go through the trigger date, you can see that the trigger date jumps up to several million. Sorry, this is the cancellation charge that jumps to 8.5 million. So this is one of the key challenges that developers are thinking of, and again highlights the importance of ensuring that you have a viable project that you are committed to if you are to go through this trigger date. Also, on the grid side of things, we have transmission charges, which are operational charges hitting larger wind farm projects, which are transmission connected. And finally, we had a lot of issues. We've had a lot of issues over the last few years with connection timeframes pushing out due to a high volume of grid applications, and the grid operators struggling to deal with that significant volume of people asking for connections. Also, there's a lack of internal resource within the operators to deal with the increased number of applications and the increased number of connections, and crucially, all of the wider reinforcement works that have been triggered by this sort of huge increase in the number of projects wanting connected, and also supply issues for plant and equipment, and the resulting increase in cost. And this very much what I just talked to there was the sort of key overview of the grid position up until sort of middle end of last year, and always for the last couple of years there's been a lot of discussion about grid reform, and what we've seen since the sort of tail end of last year and the beginning of this year is that this is very much the year that these grid reforms are going to be put into place, and they are yeah, I think it's safe to say that what's going on just now in the grid is the biggest shift, I think, in the renewables market since they withdrew all the renewable subsidies in 2015. It's going to have a huge impact on the industry, and I could easily spend the rest of the day setting out everything that is going on with the grid just now. But in a nutshell, the previous grid connection process meant it was too easy to apply for and secure grid capacity and then to sit on it and not really do too much. So if projects requested capacity, then it was the grid operator's responsibility to provide a connection offer. And initially, when I started work, there was no real means of withdrawing connection offers. It was basically once you had the offer, it was very difficult for them to get it to take that capacity back. As time has progressed, they have looked at putting in more and more sort of attempting to bring in more and more sticks to ensure that people didn't just secure grid capacity and not progress with it. But now this complete overhaul is designed to make it very clear that if people are going to be securing grid capacity, then you will need to use it or lose it, which I think is I think is generally a very positive thing. Um, so, but the previous process has led to a situation where I think at last check we had maybe 800 gigawatts of contracted generation and storage capacity across the UK, and that is 2 to 3 times as much capacity as is needed for the UK to hit all of our net zero targets. So the aim of all the grid reform is to make the grid connection process far more strategic. And the Clean Power 2030 document that came out, that was published at the end of last year, is being used to dictate what new capacity is needed and where. So they've taken a much more strategic approach. Um, they're looking at targets for capacity by technology and region, and they're going to be working through on a sort of first ready, first connected basis. If so if you're the right technology in the right location and you have developed your project at a reasonable pace and secured planning and secured the property and then you will generally be rewarded with potentially a grid connection date that is sooner than you had originally expected. Um, and what does that mean though for wind developers in Scotland? So many, I think, well, certainly my view is that a lot of early projects, so projects that are in earlier phases of development, maybe in the sort of feasibility or early permitting stages, may be on hold for a good chunk of this year until the impacts of reform are better, or the grid reforms are better understood and what the implications are for their particular project. Whereas projects that are already sort of well into the development process may be pushing hard to make good progress because they are aware that at a certain point they will be looked at, their progress will be assessed, and how far they have come and how ready they are to be built will dictate what their connection date is, if at all, if actually they receive a connection date, an updated connection date. Um, it is likely, and certainly the Clean Power 2030 document did highlight that um, there is potential that you know, there's not a huge amount more Scottish wind capacity that is already in the planning process or is ready to construct needed to reach the 2030 target. So it could well be that Scottish onshore wind capacity could be that people have secured capacity. It may not actually be something that the network operators need or is oversubscribed in the area. Now, that's potentially quite a significant blow to the Scottish onshore wind industry. It's hard to tell at the moment what the extent of that will be, if any, because ultimately there is, as I said, there's hundreds of gigawatts of other contracted capacity that is, very much surplus to requirement, and a lot of that is storage, and so once they pull out a lot of that sort of storage capacity, they'll maybe need to have another look and see where things are sitting. So just to be clear that this sort of the ongoing grid reforms are really not a huge or less of an impact on projects which are behind the meter, i.e. you're offsetting an existing demand or a new demand, or where there is an alternative use of generation other than export. So these are projects which are likely to be less impacted by the grid reforms. And similarly, there is an assumption that all existing sites will be repowered. So repowering of all the wind farms is something that's going to be quite busy and increasingly busy in the coming years. But generally speaking, it's fair to say I think that what is going to happen over the next sort of 6 months in terms of the final decisions on grid reform will have a big impact on the future. Um, of all renewable projects across the UK. So another area that we thought was sort of worth focusing on is finance, and generally speaking, higher project costs due to inflation and grid cost increases that previously discussed, alongside general revenue uncertainty, means that it is becoming harder to ensure projects are seen as commercially viable. That has led to a big push in projects looking to increase the scale of development, because ultimately the larger the larger the capacity and the larger the swept area, all things else being equal, the lower the cost of the electricity produced by that turbine. So the more efficient the more efficiently it can generate power. Um, and this has led to a number of manufacturers mothballing production of their smaller turbine models. And by smaller, I don't mean sort of small and micro wind turbines. For example, Siemens Gamesa have recently announced that their smallest turbine that they will be producing is now a 6 megawatt turbine with a minimum tip height of 200 meters. Now, there are other manufacturers that are still offering turbines of 150 to 200 meters tip height, but a lot of the bigger manufacturers have focused on 5, 6 megawatt plus projects because they see that that's the way that the way that things are going. But that does also mean that many projects have been delayed as they have gone back into planning to get a tip height increase, to sort of look to offset the more significant cost uncertainty and also the move from manufacturers away from smaller machines. Most developers will be going to lenders ultimately to be able to fund the build out of the project. So a lot of them are being reviewed by banks and their advisors. A recent spike in borrowing rates in the latter half of this year and latter half of last year and early this year has also had a bit of a cooling effect on new projects coming forward to secure finance. Hopefully this is short-lived, but all these things kind of do hit home. And then final investment, the long-term power prices are still a key unknown. So future wholesale price curves differ significantly by who you ask, and lots of your Baringers and your Cornwall Insights and your Auroras will all provide at no small cost their expectations of where energy prices are going. Lenders, unfortunately, generally typically choose the most conservative option, which can put additional stress onto your financial models, but so that's the bank's prerogative. And things like contracts for difference, CFDs, and or sort of sleeve PPA deals can, to a degree, help reduce the revenue risk. But CFDs, for example, are still open to negative pricing, which is something that's coming forward as a potential revenue risk going forward. So it's definitely, as I said before, and bringing this back to the shared ownership, as you can imagine, all of this kind of going on in a post-consent, pre-construction environment does make for very busy times. So again, sort of recommending early engagement with developers if interested in shared ownership, and that's sort of looking to come in at the detailed feasibility stage. And I appreciate I'm going slightly over. So yeah, so in conclusion, I'd strongly recommend that those are interested by what I've covered briefly today, have a look at the overview document that we've completed for Local Energy Scotland when it's available. Whilst no two projects are ever the same, hopefully the general process there and the phases are similar for all projects, and there is sort of yeah, I'd sort of be, yeah, very much recommend you go and have a look at that. And it was really sort of a good opportunity to pick up on some of the key issues being faced at the moment. And I think um, grid is certainly one of them. And this year is going to be very interesting to see how it all plays out. And I think there'll be some big winners and some big losers in the reforms. Um, Finance is always challenging and continues to be so, but and access as well is also something that we're increasingly seeing as being problematic, or something that needs to be assessed early on. Um, and whilst the vast majority of developers are very experienced, um, there are, you know, some newer issues popping up that are still causing them problems, and generally at the moment there's a lot of people that are waiting to see things like how the grid reform plays out before maybe pushing on with a lot of their projects. But anyways, I'll now leave. I'll pass over. I think hopefully we've got 20 minutes for questions. If I can just get up. I don't know, Christina, is there any questions on the boards yet, or?
Let's see. I'll check if the chat. So Stephen has asked if the current grid connection dates will be honored.
Um, Depends on when they are. I think I think ultimately for most projects, I think if your project has made good progress and has hit its milestones, so if you've been able to secure planning and property within good times, within reasonable timescales, then yes, there is, yeah, you should be able to hold that grid connection date, but it's not guaranteed. Because ultimately, if it's deemed that um the project is sort of surplus to requirement, then there is the potential that they take a really yeah, really hard view that actually they they wouldn't actually allow they wouldn't sort of facilitate that connection. So it's maybe a bit too early to say for certain, but ultimately I think yes, if you've met your milestones, I think there's a good chance that connection dates will be held. Um, if, however, the project is not as far advanced as it should be, then I think there's a very good chance that your project might be moved back. It's difficult to know with that specifics, but yeah, that's in general terms.
If it's okay if I jump in with a question, actually.
Yeah, go for it.
I've jotted down lots of notes, and I think it's really interesting to hear about, not just the process, but also a little bit more about the context that developers are working in also, and kind of a bit of more understanding about the need for or the use of larger turbines. So when you were talking about grid, you were talking about kind of the importance of for developers making sure that they've got a viable project because of the costs that they're incurring, kind of both along the way and then the risk of the cost if they kind of put the brakes on the project if they cancel
Mhm.
the project. And then in the finance section, you were kind of talking about how difficult that can be in the current landscape to make sure they've got a sort of commercially viable project. So I just wonder, does that, can we draw the conclusion? Is it fair to say then that by the time a project goes into planning, the developer is pretty confident that they've got a profitable project to build?
Um, I mean, yeah, I think normally, and I can't speak on behalf of all developers, but normally what you would, as you before you just made a decision to move into a project, if say your target rate of return was 8%, say, um, you know, typically we wouldn't bring projects or wouldn't go through from detailed feasibility through to permitting stages unless the project in its current form had a 10% rate of return. So most of them would give themselves some buffer. There's no point because generally as projects move through development, you might lose a turbine in planning because this one turbine is just sitting too high, and from a landscape and visual perspective, it's not acceptable, or it's too close to houses and the noise is too high, or there's an osprey nest, which means you lose turbine 13 and 14 on the east side. There's always things that chip away at a project. So yeah, so I think they would feel comfortable that with a buffer they can hit their target rate of return that they need for the project to work. The difficulty is that I'd say in a bad year, or if there's a couple of years of low power prices, that can drag down future forecast prices, or there are still a number of uncertainties that you're going in with, again, hence the reason to have a buffer. um but this is kind of things like the bigger shocks are uh grid cost doubling because of you know significant inflation between 2021 and 2024, and general prices going up. These are things that you can account for small reasonable levels of inflation, but these are sort of unknowns that come through. And so yeah, I think it is one of those things that you develop a project that works with a good buffer, and you know that you're going to be chipped away, and the only way really to offset that is potentially for bigger turbines, bigger blades that work against that sort of general price increases, or the more revenue you can get. And that's certainly helped a lot of projects where if they were stuck with the original turbines that they were basing their financial model off 4 years ago when they first looked at the project, it wouldn't stack up. But in the interim, a new larger turbine has come through that saved the project. So yeah.
Thanks.
No worries.
So Chris asked how much this process reads across other technologies, so solar, for example.
Um, solar's solar's got similar issues. And I suppose the sort of the saving grace of solar is the technology has become a lot more efficient over um even the last 4 years. The significant inroads have been made to capacity of panels. So you can have there's a just put it into context. What was in 2020 was a 400-watt panel. The same size panel is now 600 or 650 watts. So that has been able to offset that. They've made more significant sort of improvements to the technology than the wind has been, maybe a bit more gradual. So that's been able to allow solar to kind of to come through a little bit less unscathed. And also as well, there's a number of the issues that I think are more specific to Scotland, and particularly the north of Scotland, where a lot of the wind farms are going, where we've been subject to um, you know longer delays because of transmission reinforcements, or higher transmission use of system costs, and these sorts of things. So there's been a number of things that have hit wind projects probably more so than say solar in the south of England and wind in the north. I think with probably the wind projects in the north of Scotland have had a tougher time of it, um, uh, generally. Um, and that's not to say that um, you know the returns for wind are generally usually a little bit higher. Um, but again, the sort of the risks have probably bitten harder for wind.
Okay. And in terms of the sort of planning process that you described in the flow chart, that's very similar
Ye-
for, I mean, obviously
Um,
different kind of studies would need to be done for solar.
yeah, I think the difference is with solar. Yeah, you're probably not, your 2 years of bird surveys are not required. Your wind monitoring, I would say your development timescale for a solar farm is probably, I'd say on average, maybe 4 years, 4 or 5 years. So maybe it's 2 or 3 years quicker. It's cheaper, and yeah, generally it's a bit simpler from a technological background, perspective. You're um so yeah, definitely solar is the easier win, but it's not as much fun.
Okay, so we've got a question here. Gary's asked, you said there is enough proposed wind energy in the pipeline to meet our net zero target. Is that on and offshore wind combined? And he also asks, won't the government want to try and get a lot more generation for export abroad?
Um, yes, I think at the moment, yeah, I think it's certainly from what I've seen with what's in the pipeline, we've got enough onshore to hit the onshore wind target. The question is, and I think one of the things that is sort of being looked at the moment is whether or not will offshore actually hit their targets, which are generally more ambitious. And you know, if not, then will some of that sort of slack be picked up by onshore? I know that offshore wind is having they've got a number of additional challenges at the moment, and some of the bigger offshore wind developers are having a tough time at the moment. And there's for example, there was CFD rounds, not this last one, but the previous CFD round. I don't think any offshore wind was successful or actually even bid. So yeah, I think that's yeah, I think there's based right now I think with potentially the onshore, there's enough going through that could meet our 2030 targets, but actually is there scope to do more onshore, um to maybe pick up some of the slack elsewhere, mainly offshore. And sorry, was there a second part to that?
And he asked also, would the government want to produce more for export?
Yes, yeah, definitely. Export is something that is, yeah, yeah, export is something that is good. I mean, we have limited interconnectors at the moment. I think there's maybe only 8 to 12 gigawatts of interconnectors at the moment. And quite often they are going the other way. We've become sort of over the last few years, there's been a lot more um generation coming onto Britain than leaving. So there is potential for interconnectors going forward. The other thing, and it's a good point to bring up, is that you know the future energy scenarios that we're working on assumes a large increase in demand as we electrify heat and transport. Um, and delays to that electrification of heat and transport will also have a knock-on impact on generators. You know if we're bumbling along installing um, you know, 1/10 of the targeted heat pumps that we hope to install, that then leads to a much lower base demand for which renewable generation will offset. So there's a number of different things here. Interconnection is one of them, but also demand scenarios, which are not insignificant in the impact it has on the renewables industry on the tail end.
Okay, thanks. So we probably have time for one more question. So I'll go with this last one that's come in. Mike asks, do you have any view on where community benefit rates might be headed? You referenced the recent high inflation. Should we expect to see offer rates grossed up from 5K to 7K, for example?
Um, to be honest, it's not something that I've seen. I don't know, Christina, if you guys have had a view of that from your side. I've not seen that discussed elsewhere. Um,
No, I mean, it is at the developer's discretion, and we do know of some developers that will offer more than the standard 5K, but yeah, um, it's not common, I don't think, at the moment.
yeah. And
Um,
then we do one more.
yeah. So there's a question about, I don't know if this might be a longer answer. For smaller scale developments utilizing community buy-in funded through the agreed level of community benefit funds, at what stage should the community expect to be responsible for costs?
Okay. Let's have um, I don't know if there's a set answer for that. Sorry, just to be clear here, you're it's just and Jody, I don't know, Gordy, sorry, I don't know if you're able to expand on this, but are you talking about a sort of a shared ownership project, or is this is this a standalone community owned project?
Uh, yeah, I've unmuted myself. Is that okay? Can you hear me now?
Yeah, yeah.
No, it's more it's not standalone community, but just generally where the opportunities have increased for community buy-in at various scales, and the scales are increasing because of the size of
Yeah.
generations increasing. So it's like looking at when the community is going to be responsible on the financing factor of a percentage of community benefit can be used to finance their community buy-in effectively, which has been a model that some developers have used. That they say, we'll drop your community benefit to half, use that other half to fund your community buy-in over a period of time. So
Okay.
my question is that if that's fine, agreed, at what stage would the community be? Is it post trigger, pre trigger? When are they going to be responsible to start paying the
I
cost?
I would say in this scenario here, I would expect if it was sort of paying off through the operational on the operational side of things, I would expect that that would be something whereby there wouldn't be a requirement for community buy-in if you're offsetting against the sort of the operational side. I must admit I've not seen that being offered before. But yeah, in that scenario, I would imagine that would be something that would be agreed
Yeah,
and set up at, almost at kind of commissioning. I mean, it would be something that would be agreed ahead of construction. Um, but yeah, it would need to be something where and actually if you're offsetting against community benefit funds that would otherwise be received, I would imagine that you wouldn't be responsible for the cost. And ultimately, those kind of grid liabilities and securities that I discussed, they all fall away once the project is connected. Um, so hopefully you wouldn't be accepting if you were kind of buying into the project at that late stage, it would be you'd have no or limited kind of no liability for any of those because they would have, at commissioning would have disappeared. Um,
yeah,
but yeah, I must admit, I'd need to look at a bit more detail as to how they would structure that, because I've not seen that before.
yeah. I know of a couple of wind farms that model has been used now currently, and effectively it's valuation of the wind farm at commissioning stage, and their 5% say buy-in is based on the value of the wind farm at commissioning stage, and that's effectively the value they're buying in through their community benefit fund.
Oh, yeah, the community benefit fund that they sort of initially what they would initially sort of give up and then
Yeah,
and they would have that take. No, that yeah, no, that okay, yeah, no, that makes yeah, but I think that in that scenario, I wouldn't imagine you would have any liabilities because it's all sort of offset.
thank you.
No worries.
Right. Thanks very much, Ian, and thanks everybody for joining us and for your great questions. I'm gonna just stop the recording now.